The first half results for Tarsus demonstrate the successful execution of our quickening the pace strategy. We've got industry-leading organic growth coming through in terms of revenues of 14% and in terms of our visitors, very pleasing at 9%. We've also got an increasing number of replications that we've launched in the first half, and in particular we're very pleased with the successful launch of our education show Guess in Mexico and 2 replications of our 3D printing shows that we bought last year. In addition, we've launched a very successful partnership with DMGT in Indonesia with Big 5. But from a strategic perspective, we finished up the period with the disposal of our French business, which is a seminal moment for the group. With 5 years of repositioning the group into the US and emerging markets, I'm very pleased that now 85% of the group's pro forma revenues for 2015 will come out of those geographies. So we're well placed going forward into the second half. In terms of the financial performance in the first half of 2015, it really focuses on the execution of the quickening the pace strategy, which has 3 elements. Firstly, improving the financial returns to our shareholders. Secondly, increasing the number of visitors attending our events. And finally, increasing the exposure to our chosen markets of the US and the emerging markets. I'm very pleased that in the first half, in terms of our key performance indicators, our earnings per share target of 5 to 10% was exceeded. Our visitor target of 5% was exceeded and we hit 9%. And thirdly, and very importantly, we now got up to 85% of the business coming from the US and emerging markets against a target of 75%.
The most pleasing feature of the results of the first half of the year was the strong performance across the whole portfolio. In the emerging markets in Turkey, we had very strong performance from the large biennials Asansor and Comatec. In Dubai, Golfpack and Print and Guess were very encouraging events, and we had a very pleasing performance from our Chinese portfolio. In the US, our off-price business continued its track record of solid delivery. Our medical portfolio, we had our first South Beach Symposium dermatology event, and that was a fantastic show. In the established medical business, we had a really great show in Florida, and our education business continues its transition program, and it is very firmly on track. So overall, it's a very good set of results with record revenues and profits. The revenues are driven by FX, biennials, acquisitions, as well as good organic growth. FX is quite complicated. There's a strong dollar being partially offset by the lira, and actually a small positive for us in this half year. The underlying organic growth is 14% across the portfolios. It gives us a record revenue performance of £34 million. Now this is coming through very nicely to our profits and earnings and gives us an EPS of 3.4 pence per share and allows us to pay a dividend of 2.5 pence per share for the half year. Our cash generation was very strong, and we finished the half year with net debt of £43 million. That's gearing of 1.8 times net debt to EBITDA. Now that does not include the proceeds of our French disposal, which we announced recently. That was for €9.2 million at an effective price of 8 times EBIT. So overall, we've got a very strong financial position. We've enhanced that by increasing our bank facilities up to £75 million and extending them out to 2020. So overall, we're in a very strong financial position.
The outlook for the second half is very encouraging. Bookings are up 15%. Very pleasingly, our 2 big biennial shows, Label Expo Europe, which takes place in September, and the Dubai Air Show in November, are both trading very strongly. Our Turkish and medical businesses are trading very much in line with our expectations, and the full year forecast as we enter the second half is looking very positive indeed.